So, dear participants, now we move to the first panel discussion of the conference, and we are going to talk about the financial ecosystem for the entrepreneurial capital. We have two esteemed guests here from different regions with different experiences. I believe these experiences will be also beneficial for Istanbul Finance Center projects that we are planning to build in Ümraniye district. As a finance officer, I would like to say that two integrants of the Istanbul Finance project will be fintech and asset-based financial structure. So the experiences from the Singapore, especially with high portfolio management and venture capital, that will help to build up some increasing the financial instruments for the asset-based product. And for the fintech part, I believe Professor Ergen will help to, commentate on what can be elaborated on the fintech. So I would like to start with Mr. Lee. So we have roughly 40 minutes for the panel. We are planning to have the 30 minutes for presentations, and we're going to say for the 10 minutes for the Q&A session, so please raise up your questions to the application. So I would like to give the 15 minutes for each panelist, and I would like to start with Mr. George Lee, please.
Thank you. First of all, I come here as a representative of the CFA Society Singapore, so greetings from sunny Singapore. I'm here to share with you Singapore's experience in the development and promotion of private equity / venture capital management in Asia, with a special focus on how Singapore has positioned itself as the hub for Asia. Very quickly, as we all know, private equity as an asset class is growing. Morgan Stanley and Olivier Wyman in March this year, actually in a report estimated that in 2018, allocation to private equity amounted to about 7%. And they projected that in 5 years' time, this will grow to 9% of all global asset under management. So private equity as an alternative asset class is of growing importance, ranging from every asset investor class, high net worth individual, insurance company, pension funds, sovereign wealth funds, they all invest in private equity. Just as a lot of you may have the misconception to think that private equity equates to venture investing in new startup, new ideas. Actually, private equity is slightly broader than that, and particularly in the context of Asia. Most of the private equity investment goes into what we call privatization deal, taking companies from public to private. And the other asset class is real estate, which is very big in Asia. That means you have a lot of private equity funds going into Asia to invest in real estate, enhance the value, and then divest them through secondary sale. Now, this is something that I'd like to start by sharing with you. Obviously, the high growth in Asia is driving a lot of global and regional private equity funds to go into Asia to take advantage of the high growth. Asia has become an important component in any balanced, diversified portfolio. At the same time, Asian companies are beginning to see the value of staying private for a longer time, and hence increasingly turning to venture capital, private equity as an alternative funding source. And most importantly, many of the entrepreneurs in Asia are beginning to recognize that private equity is not just merely a source of funding. It also offers the opportunity for venture capital funds to help them in certain business operation. And Bain & Company did a survey last year, and most of these entrepreneurs feel that they are turning to private equity more because they are fearful of digital disruption, and they are afraid, or they do not have the technical expertise to deal with it. Unfortunately, the same report also pointed out that the private equity managers themselves acknowledge, only 3% of them acknowledge that they have the necessary in-house capability to help their investee companies in dealing with digital disruption. 1/3 of them have said openly that they are investing in resources. They recognize that this is a need. If you want to be a private equity asset manager in Asia, you need to have capabilities to help your investee companies deal with digital disruption. Venture capital in Asia has actually peaked in 2017. Many of you may not be aware, but in 2017, private equity investments into Asia accounted for 29%, which actually overtook Europe as a source of investment, private equity investments. At the same time, Asian-focused funds are now holding a record 23% of global private equity assets, a significant increase from the 9% 10 years ago. China continues to account for the bulk of the investment, 45%, but increasingly, Southeast Asia, particularly Singapore and Indonesia, are attracting a lot of fund flows, private equity fund flows. Notwithstanding the fact that a lot of investments has gone into Asia in 2017, 2018, there is no shortage of funds. Because in 2017, it was also a record year for divestment, private equity divestment. At the same time, they raised an additional $66 billion of new funds. So as one measure which the industry talk about, dry powder at the end of 2018 stood at $225 billion, which is equivalent to 2.2 years of investment at the current rate of investing. So there is continue to be a lot of capacity in Asia. The next point is, as I said, taking company private, public company private, is one of the strongest driver of private equity investment in Asia in 2017. And because of the higher growth, you will see that many of these companies are taken private at a valuation, for instance, EBITDA to enterprise value of 14.1 times, which is significantly higher than what you can get in the US. Notwithstanding all this high valuation, because of the very rapid growth in Asia, the private equity fund has delivered net NII on an average, on the median net NII of 11.5%, which is actually comparable to the global average. And some of the top quartile performers has delivered as high as 18.4% net IRR. Why is Singapore being touted as the private equity venture capital hub for Asia? First of all, the very pro-government, pro-business policies, the transparent regulatory environment, as well as various tax treaties, has made Singapore a very attractive center for many of the regional global private equity asset managers to locate themselves into Singapore. The second thing, Singapore started to promote private equity investments around 2006, 2007, just before the global financial crisis. Okay? It was very fortunate that at that point in time, when they started to promote the private equity business, Singapore was already a very established wealth management center with its growing pool of high net worth individual, corporates, and institutional investors. At the same time, Singapore was also very lucky because it has two very compelling sub-ecosystems, the asset management industry and the treasury center, and Singapore as a treasury center, with a very comprehensive suite of risk management products. Asset under management in Singapore, which started around the mid-80s, and this is why many of you may not realize the CFA Singapore Society was the first CFA society to be established in Singapore outside of the United States, because the government in the mid-80s, when they wanted to promote asset management industry, they strongly encouraged candidates, employees in the fund management industry to undertake the CFA curriculum. And we have our first CFA charter awarded in 1986. Okay, so the fund management industry has been growing strongly in the last 5 years at 15%. Today it stands at $2 trillion. Now, I got this number from the official website, but I also read this week's Economist magazine, which gave a number of $3.4 trillion. Whatever the number is, based on these statistics, Singapore is now the #1 asset management center in Asia, having overtaken Hong Kong many years ago. 80% of the funds that are being managed in Singapore are sourced from outside of Singapore. 2/3 are invested in Asia. What is more interesting is we have seen in the last couple of years the growth in alternative investment is at 17% versus traditional asset management at 3%, which indicate that there is a growing pool of assets that are moving to Asia to take advantage of the private equity venture capital space. The other important thing is the ecosystem, the family office ecosystem. Why is the family office an important component of private equity? Because family offices are usually started by entrepreneurs, successful businessmen, and they have a tendency to be able to understand private equity, venture capital investing much better than a traditional pension fund or institutional investors, because they are themselves businessmen and they understand business risk better. UBS published a report last week, okay, covering the period 1st July 2017 to 30th June 2018. They estimated that in Singapore there are anywhere between 100 to 120 family offices already existing in Singapore. Despite the fact that during this period under review, the return on the family office fund has actually declined to 5.4% because of significant deleveraging due to global financial risks, geopolitical risks. However, allocation for private equity and real estate investment continue to grow. So this is a very significant development in the sense that notwithstanding people trying to deleverage, de-risk, there is no slowdown in the private equity investment space in Asia. At the same time, Singapore is the 3rd largest FX center. On an average, $500 billion of US dollars of FX are traded. All the top 5 global banks have their regional FX center based in Singapore. Singapore has the most diversified range of futures and options traded in 3 exchanges. And without resting on its laurel, the central bank is promoting the movement or the trading of FX in Singapore to an electronic platform. Now, the second initiative why Singapore has started and became an important private equity venture capital hub for Asia is a strong promotion by the government to develop a talent pool. I share with you the experience of asset management. In around 82, 83, the Singapore government says we want to develop Singapore as a private asset management industry. So what do they do? As I said, they went to deepen the talent pool by encouraging everybody to take CFA. Then we have the Sovereign Wealth Fund, which is called Government Investment Corporation. They started to farm out money. They tell all the global asset managers, you want to manage your money, you have to move your office or at least establish an office in Singapore. So they are using the same template now to encourage regional and global private equity asset managers to come to Singapore. Okay? At the same time, the government is very supportive of entrepreneurs that want to start. So the Academy of Law, which is the Law Society, together with this association called Private Equity Venture Capital Association, they actually have come out with a template to help entrepreneurs. So if you have a business idea, but you don't know how to negotiate with the venture capitalists, they actually help you with the template, what to negotiate, what to look out for, and so on. Okay? At the same time, they're also trying to build an alternative market platform. I talk about this. The MAS, in order to encourage the development of private equity industry, they have actually, November last year, set up a fund, $5 billion, and they told the asset managers, you want to manage this fund, you come to Singapore. You establish an office in Singapore. This is how they start, okay? So managed by global managers to establish a significant. At the same time, the MAS has also established what we call a match initiative. I will go on this match initiative a bit later on. The venture capital industry in Singapore has been growing very significantly. In the last 5 years, the AUM has grown at an average CAGR of 28%. Today, it roughly is about 190 billion US dollars. Another important initiative that the government recognized about 5 years ago, in order to continue to promote Singapore as a private equity center, is to establish a startup ecosystem. Okay? Many of you may not be aware, but Singapore is very highly ranked as a startup center. Genovi 2019 Global Survey ranked Singapore as number 14. In certain subsectors like fintech, we are ranked number 5. Blockchain, we are ranked number 4. The government provides enormous amount of support. Startup, your first 100,000, 75,000 of your first 100,000 of profit is exempt from tax. Because they recognize that entrepreneurs, the moment they make money, they need to plow back the profits into the business. Registration. IP registration attracts tax deduction. R&D expense attracts multiple times. Not just if you spend $1, you actually get $2.50 of tax deduction. Okay? And at the same time, match funding. I was just telling somebody yesterday, if you have a business idea, you come to Singapore, all you need is $10,000. Okay? The government gives you another $30,000 to kickstart your initiative. And at the same time, they help you with second phase funding. Every 2 to 4 million you raise, they actually match with $1 million. The other important initiative is, of course, they encourage a lot of help. The point I want to make is that in Singapore, they have appointed 45 accredited mentors. So if you are a businessman, you have business idea, you are not very sure how to run a business, you can go to the government. They will appoint an accredited mentor to help you and to guide you with some of your business ideas. And last point that I want to make is, this is what I call the networking. In April this year, the government launched this Slingshot 2019. For some of you who are interested, you just go to the website, Google www.slingshot2019, and you will be able to see what it is all about. What they did was they allow people with business ideas to log in, okay? So on 26th of April this year, there were 100 startups. They matched 100 startups with 50 venture capital funds. It's like a speed dating. and they bring them together in a room, they match it one by one, and they help them to find investors. So these are some of the initiatives that has actually the government has initiated to create the startup eco-environment. Thank you. Sorry.
Thank you, Mr. Lee, for a brief explanation. I think your presentation resembles why Singapore has become a hub for venture capital and the private equity. So I'm raising up the questions. We'll have a Q&A session at the end, so we may have, converge both of the questions together. So I would like to turn to Professor Ergen. As an expert from the private sector and academia, he will share his experiences about Silicon Valley.
Thank you very much. Part of the experience, I will talk about Silicon Valley, and this is part of experience, part of observation, and part of research. And when we talk about entrepreneurship have several ingredients, starting from entrepreneur all the way up to the exit strategy. And if people come up with this chain, then you can come up with a fruitful ecosystem. So we can look at how Silicon Valley does this. And depending on the generations, when I ask about Silicon Valley, people come up with different answers. So they come up with Google, Facebook, Twitter as Silicon Valley. And if it is a little bit older generation, people started to recognize Apple, Microsoft, Oracle as the enabler of the Silicon Valley. If we go a little bit further, it goes to Intel, more to microwaves. And if we go further, we can reach the fruit trees and gold rush. So Silicon Valley is a location. There is no entrance that says, welcome to Silicon Valley. There is only buildings, and buildings are occupied by companies. Companies start, live, and die. And typically, the new company always gets the campus of the old company. Today, Google is on Silicon Graphics campus. Facebook is on Sun Microsystem campus. And even today, the Facebook sign in the front of the campus has the Facebook in the front, and at the back is the Sun Microsystems, saying that we can also die as Sun Microsystems. So there are two good universities, Berkeley and Stanford University, and these are the drivers of the innovation. If we look at Istanbul, we have 70 universities and more than half an hour drive. And it started with first Technopark, which is founded by Frederick Terman. Frederick Terman was a very good radio engineer, and during the Second World War, the government asked him to solve the problem that they faced with the Nazis, and he came up with technologies to beat the Nazis' radar system, and the war ends 1 year earlier. When Frederick Terman goes back to Stanford as a dean, he persuaded the owners of the Stanford to saying that, we built products with the fear of war, but in the normal case, products should be built in companies because universities is like a river. You equip the student with knowledge, and knowledge goes with the student when he graduates. So they come up with the first Technopark, and today everyone is trying to adopt the same thing. After this, there was a Sputnik moment with the name of the Sputnik. Russians sent a satellite to the space, and US realized that they are very late in technology in a two-pole world, and they pour money to the defense industry. And most of the money is captured by West Coast, by the ecosystem which is being built around Stanford. In this Technopark, every big company came, and they create an ecosystem, knowledge economy around the university. Today, they attribute Frederick Terman as the father of Silicon Valley. Of course, system was ready because US system was built with a monopole mindset. They used to have many monopoles, like AT&T was a monopoly in telecommunication. Xerox was a monopoly in copy machines. And when you have the monopole mindset, you have a luxury to do the R&D. And they have a Bell Labs at that time, and Bell Labs was doing a lot of R&D. And typically, the amount they spent was divided by the number of subscribers and sent as a bill to the people. Most of the things that are invented in Bell Labs, which was in the East Coast, is productized in the West Coast by startups of the Silicon Valley. Of course, another addition was after Second World War, they thought that there will be companies out of university, but these are risky companies. There are a couple of risks. Risk can come up from the technology, risk can come up from the team, risk can come up from the market. So they need to come up with a different mindset about financing. One of the generals of the Second World War introduced venture capital as a new form of financing to these startups. Of course, the way he introduced in the East Coast didn't really work well because he opened the fund to the public, and whatever decision they make was visible to the public and the funders, so they couldn't really get a subjective decision making. However, the students of George Joliot went to West Coast and introduced today's venture capital system, which is a closed fund, and it's an 80-22 system, and if you make money, you return the money and 80% of the profit and get the 20% of the profit as a venture capitalist. When these two met in Silicon Valley, the first company was funded, which was Fairchild Semiconductor. This company is, most of the people attribute this company as the originator of the Silicon Valley. It's funded by 8 engineers and 2 bankers, venture capitalists. And these people quit their jobs from a company called Shockley Semiconductor. William Shockley was the inventor of transistor. They quit because William Shockley was a brilliant scientist, but a bad manager. They tried to escape from the company and come up with their own company. And they introduced a couple of things to the system. One of them was the first venture capital. Second was stock options to every employee. At that time, the era was Cold War era, and people accused these people as communists. And the third one is encouraging spin-offs. They encourage people to quit their companies and start their own companies. And from Fairchild, at the very near future, there were 32 companies. Today, the companies that root back to Fairchild reach 2.something trillions of dollars. These are also the ownership mentality. It was new, and it was adopted now all around the world. With 80s, with the personal computer era, people started to rush Silicon Valley. All the venture capital firms, legal firms, the foreign students, the diversity increased. Already there were hippies, there were Mexicans, there were gold diggers. There was a different environment, different diversity in terms of cultural mindset was appreciating the difference. And that also had many good innovations. And today, most of the founders of the companies are foreign students. Also, one more thing to add is the employment law. There was an interesting employment law in California, which is enacted in 1872. When they bought this state from Mexicans, there were 300,000 gold diggers rushing to this state, and people were working for others. They were digging gold, and when they tried to change their jobs, nobody was allowing them to do so, because you can always quit and try to dig gold a few meters later, a few meters forward. So people started to kill each other, and California government, local government, not the federal government, come up with a law that's called at-will employment. This at-will employment means that no signature you put on a paper can forbid you to change your jobs. You can quit your jobs anytime you want, and employer can get rid of you anytime they want. So this is the unique employment law of California, and there are also NDA and NCA, I'm sure you guys know better than me. These set the environment different than the other states and the rest of the world. Because now you have an idea, when you have an idea, you can come up with a team and start the company. If it doesn't work, you can dissolve the company. If you really compare this with the rest of the world, it's the hire, no fire system. So we can easily come up with the company, we cannot dissolve the company. And this one, ownership, venture capital, created a different ecosystem. And this ecosystem let people change their jobs easily. And this ecosystem didn't let people to change their children's school or wife's occupation. They could go to the next door, start from the scratch, and try to introduce, prove themselves as an engineer, also learn from them, and the information started to flow. But in the West Coast, people join a job and retire from that job, and a few years later, you want to be a manager, director, you want a corner office, then the utilization and efficiency goes down. I also experienced that, as a startup owner there, we recruit engineers at 60 years old age. They are just doing perfect programming, perfect coding. In order to survive, they have to excel in what they do. So they still say that gold rush is still on. With net present value, they digged $2 billion of gold at that era. And annual revenue of Intel is, exceeding $40 billion. This is from a transistor, and transistor is made from a sand. And Apple come up with, $60 billion when they introduced iPhone 3. Still, with Bitcoin, in 6 years, they reached $300 billion economy. With AI, we are trying to reach $3 trillion revenue increase. So they call this a second renaissance. And now we are not talking anymore about just communication, but Silicon Valley is focusing a wider spectrum, nano, bio, the health, defense, all are hacked by small startups funded by venture capitalists. When we look at back, this is a Draper cycle I got from Tim Draper. There are a couple of waves that he observed. First, a venture capital system comes into picture, made an innovation into a company, then a private equity comes and consolidates them. These waves are building us towards a monopole economy. So if you don't have a monopole possibility, it doesn't have a value in terms of venture capitals. So if you have, as a startup owner, has a monopole opportunity, what they do is they bring the net present value and fund your company accordingly. So for us as well, if we don't come up with a monopole from this Turkey, we will be pretty much working for other companies. So they are calling this second renaissance because the first renaissance give power to the ordinary person to interpret the religion. And the second renaissance is providing tools to the ordinary people to do communication, to do trade, to do self-driving. All those things are for empowering ordinary person. What will be the third renaissance? Any ideas, you can give it to me. So third renaissance, we are talking about AI. Now people will rest, machine will do the rest. So this is the end of my talk, and just to wrap up, for us also, entrepreneurial capital, venture capital, and what we can leverage as a country is important to build the entrepreneurial ecosystem. Thank you very much.
Professor Ergen, thank you for interesting insights from the Silicon Valley. We are already behind our schedule, so I will rush into the Q&A session. So the first question for Mr. Lee. With global examples, how can we create a hub for the Istanbul? I mean, we see transatlantic as a financial ecosystem, and we see rising Asia, especially Singapore, Hong Kong, and all the cluster over there. Do you think Istanbul has a chance to fill the gap in between?
Okay. First of all, I think Istanbul doesn't have the benefit of history. So if you look at markets like London, even Singapore, Hong Kong, New York, they have 40, 50 years of lead time ahead of you. So I don't think Istanbul should aspire to emulate like London. My recommendation or my view is Istanbul should play a niche role. What do you mean by a niche role? You select a certain market and you say you play in this market. The question is it Middle East? If it is Middle East, you have Dubai, you have Abu Dhabi. Is it Eastern Europe? In Eastern Europe, you have Vienna. My view is maybe Istanbul should play the role as a financial hub to enter into Central Asia, because you have, to a certain extent, the linguistic affinity, the cultural, right, affinity, and so on. So if this is the defined objective, then the next question you should ask yourself is, what verticals do you play? So if you start with the premise that Istanbul should be the hub for Central Asia, then you look at what does Central Asia need? Commodity financing, infrastructure, right? Mining financing, right? Now, because it's a big country, big land with very few people, so maybe you skip that brick and mortar model and go straight into fintech, using technology to tackle some of these markets. The fourth remark I want to make is, to develop as a financial center, it is easy. People always think about the hardware, the infrastructure. That's the easiest part. The tougher part is people, is the software. And to a certain extent, I would like to use the Singapore example. When we started the asset management industry, to encourage asset management industry, we actually told the global funds, you can come in for the first 10 years, all your portfolio managers can be expat. You only require to hire junior analysts. Even some of the associates you can bring in from overseas. But in 10 years, you need to localize. Malaysia tried to start what I call a KL International Financial Center. Bangkok had a Bangkok International Financial Center. They continue to fail. Why? Because they have very restrictive employment policy. They want to define how many locals have to be employed, how many foreigners can only be employed. At the end of the day, to me, this become a formula for failure, because the foreign funds, the foreign managers will say, why do I want to move my operation into any country where at the end of the day, I don't have the ability, the flexibility, the talent pool to draw on. So to me, that's the remark. There is an opportunity. You have to identify where you want to play, what you want to play with, and how you want to allow the development of that critical software.
Thank you, Mr. Day, for your comments. So as far as I understand from your point of view, Istanbul go into the niche side, so you talk about the software development and financial technology. So I would like to move to the Professor Ergen. So in order to develop the fintechs, we have to generalize our legislative framework, definitely, but at the same time, we need to have some unicorns. In Silicon Valley, we see many unicorns. In Turkey in general, there are 84 R&D centers. 63 of them are active at that point. Do you think we could see some unicorns from these R&D centers? If not, what we should do to get that?
So when we say unicorn, unicorn means a billion-dollar company who has many markets and who have an indispensable position so that nobody can move from the position. So I'll give some figures. For the past 2 years, San Francisco got $80 billion venture capital funding. Beijing got $70 billion, just Beijing city, actually. Just the San Francisco city, not the San Jose or the rest of it. Our total venture capital was $50 million. So if there is a monopoly opportunity, or if there is a unicorn opportunity that we see in a company, in a startup, a Turkish startup, we need to give a funding, and that funding is absent right now. And that funding is hard to bring from outside because there is another opportunities, and they fund other people. So that's why, most of our countries, most of our startups, the successful ones, are bought by the other